All right, welcome to Talk Tickers. Today, we're diving into Sotherly Hotels, ticker SOHO. And wow, this is a fascinating one. Their latest earnings report really paints a picture of a company fighting a battle on two fronts. On one side, you've got weakening demand, and on the other, a desperate race against the clock to fix their balance sheet. It's a real make-or-break moment for them.
So here's how we're going to break it all down. First, we'll hit the raw numbers from Q2. Then, we'll look at management's playbook. What are they actually doing about it? After that, we'll see how the market reacted, and we'll wrap it all up with our own thesis for what comes next.
All right, first things first. Let's get right into the headline results for the quarter.
So, total revenue came in at $48.8 million, and that's down 3.7% from the same time last year. Not exactly what you want to see.
And when you look at the bottom line, wow, we're talking a GAAP loss of 2 cents per share. Now, to put that in perspective, last year they actually made a 12-cent profit, so that is a pretty significant swing in the wrong direction.
Okay, and now for the metric that every single hotel investor watches like a hawk, RevPAR. It decreased by 5.4%, landing at $130.20.
And just a quick refresher, RevPAR stands for Revenue Per Available Room. It's basically the single most important number for a hotel because it blends together both occupancy, how full the hotel is, and the average room rate. So yeah, when you see a drop like that, it's a huge red flag for operational health.
So where did that RevPAR drop come from? Well, it was kind of the perfect storm. Occupancy was down, and the average daily rate was down. They got hit on both sides. And you can see how that trickles down, right? Hotel EBITDA took a big 11.5% hit, and adjusted FFO, that just got crushed, down almost 37%. That's a huge hit to their cash flow.
Okay, so the numbers are obviously pretty rough. The big question is, what's management doing about it? Let's take a look at their game plan for getting through this storm.
Well, management didn't really beat around the bush. They basically said, hey, demand is softening up. They pointed fingers at a couple of things. Less government travel, and just, regular folks being a bit more careful with their money because the economy feels shaky.
And this slide, I think, perfectly captures the whole story. It's like a tug-of-war. On the left, you've got all these external problems hitting them, the weak demand, debt maturing, but on the right, you see their counter-moves. They're selling assets, refinancing debt, really trying to fight back and control what they can.
And check out this timeline. This shows just how intense things have gotten. They got a default notice in July. That's serious. But then, boom, in September, they refinance another hotel, and now they're planning to sell a parking garage to raise cash. This isn't just business as usual. This is full-on financial triage happening right now.
So you've got this weird mix, right? Bad operating numbers, but a clear survival plan. So, what did Wall Street think? How did the stock actually react to all this? You might expect a big drop, but nope. The reaction was kind of nothing. The stock bounced around a little and ended the day up just a tiny bit. For all that drama, it was basically a flat day.
Which leads to the million-dollar question, right? Revenue missed, they lost money. Why on earth didn't the stock get hammered? What are we missing?
Here's the key takeaway. The market is completely ignoring the operations right now. Seriously, it's all about one thing, the balance sheet. Investors are betting that Sotherly can fix its debt problems, and for now, that's the only thing that matters.
Think about it this way. The market doesn't care about RevPAR right now. It cares about refinancing. That parking garage sale, that's not just a nice-to-have, it's a critical catalyst. And honestly, everyone already knew demand was getting soft, so the bad news on that front, it wasn't really news at all.
Okay, so now that we understand what the market is focused on, let's put it all together. Let's build a thesis for what we should be watching for next.
Here's the big shift in thinking you need to make. SOH isn't your typical hotel stock anymore. It's what we call a special situation. That means its future isn't about whether people are traveling more or less. It's about whether the company can pull off these very specific financial moves.
Exactly. It's an investment that hinges on a unique event, like a restructuring or a big asset sale. You're not betting on the whole economy. You're placing a bet on this management team's ability to navigate this very specific crisis. The stock will live or die based on those actions.
So, if you're watching this stock, here's your checklist for the next 6 months. Number 1, that garage sale must close. They need that cash. Number 2, we need to hear good news about their other big loans coming due. And number 3, a nice-to-have would be seeing those RevPAR numbers finally stabilize. We just need to see the bleeding stop.
So what's our prediction for the next call? We think the operating results will still be pretty soft, but nobody's going to care.
All eyes will be on that garage sale. The stock price is going to be super sensitive to any news about their debt. A successful sale could send the stock flying. Because of that, our official rating is market perform. It's got this massive high-risk, high-reward profile that's completely tied to their execution.
Now, this brings up an interesting, kind of sophisticated idea for a trade. It's what's known as a pair trade. You could go long SOHO, betting that they will succeed, while at the same time shorting a broad real estate ETF. The idea there is to hedge out all the general market noise. This way, you're making a pure bet on Sotherly's management pulling this off, isolated from everything else.
And look, it goes without saying, but we have to say it. This is purely for informational purposes. It's a way to think about the situation. This is not financial advice.